Hello, everybody, and welcome to another episode of the First Fruit Stock Club. Man, I am under the weather again. I thought that I would be spared, but all right, let me get right into it. Today, I want to talk about gold. Man, gold is surging. Gold is, man, it is crazy. I think it closed today under $4,000. But it started, I think it started out the year close to 1,000. It's gone up to $4,000 an ounce. Man, if you invested in gold early on, I was not onto this trade. I missed this trade. Let me tell you, I am what's called a Buffettologist. Right? Warren Buffett is my favorite investor. If you don't know who Warren Buffett is, he owns a company called Berkshire Hathaway. It's one of the greatest companies in the world. Warren Buffett is known as the greatest investor in the world. But uh, I remember, like in the year 1999, right? People were saying that Buffett has lost his edge. They were saying that because Buffett doesn't really invest in technology companies for the fact of he likes basic companies, man. But I really had, maybe about 2 years ago, I really had to change my view on the economy and what's going on, just for the fact of when everyone went in 2020, when everyone had to go home, right, and we were all home, and everything was basically trying to uh, uh, everything was going to a digital. We basically went to a digital economy at home. People were working from home. Everything was done from home. That really just changed my view on everything. But one of the views Buffett often had was about gold. He said, I would never, yeah, I don't really invest in gold because why would you want a cube? His quote is, if I have a cube and I have it today, and then 200 years from now, I'll still just have a cube. Like the cube of gold. It won't do anything. It won't generate any income. It won't do anything. Well, sometimes gold and technology, such as like Bitcoin's been one of the best investments in the past 5, 10 years now. In regards, if you invested in Bitcoin, you've made a pretty return. But these were things that Buffett really just did not like. Like he just said, I don't. Bitcoin is trash. His his partner, who is now deceased, Charlie Munger, was like Bitcoin is trash, but yet it had the best returns in the past 10 years. So it's like sometimes when you become an investor and the environment changes, you have to change your views. And changing my view on gold. So in the club, I got some gold plays. All right, we're in gold, and some other metals too. All right, that's what I'm putting these. I'm putting these in the club, and also, man, we're in the fourth quarter now, so I am buying stuff, and I was a little nervous about September, but what happened with September? They decided to lower the interest rate, so that basically created a risk on environment. A risk on environment means that people are now buying risk assets. Securities and investments in stocks are considered risk assets. So this is now a risk on environment. People are buying. The stock market is going up steadily and will continue to go up through the end of the year. We may have a little break here and there. What I always teach is you keeping cash, right? Keeping cash, and my account generates cash every month through dividends. That's what I teach. I teach everybody how to create a dividend portfolio that generates cash every month. So you have cash available to have a trade that comes up just like a trade, which is gold. That's one of the new trades I put in. But I'm putting in options on a lot of stocks. Put them in a club, as well as increasing my buy and hold. But look, if you have some money, this is a time. This is the fourth quarter. Now I wouldn't say just matter of fact, you could just put the whole thing in, but I would say steadily. Especially when you have a down day like we had today, it's a good chance for you to put some money in the market and put it to work. All right, so So yeah, so we just want to talk about gold. So the reason you got to understand one of the reasons, right? And let me just give you the background of gold and why it's going up. So what happens is we're currently like 123. Our debt to GDP is 100, and we're 100. Basically, the amount of money we generated, now we're in the negative, right? And is let me see. Sorry, I just want to give facts. Okay, so our debt GDP is 123. Where is it? 124%. So we have basically um, we basically have 20 when it comes to our debt to GDP, we have 123% in regards to our debt compared to the income that we generate as a country, which is not good. In fact, this is the highest it's been since 1960, right? It's the highest it's been since 1960. And even in 1960, the most recent the most recent numbers was in 2000, where we were 55% in regards to debt to GDP, in regards to debt to our income. So our debt is basically twice our income now, right? And we look at it. So what happens is that just like if you have a credit card, right? The United States has a credit card. If you have a credit card, right, you have to pay back the credit card. The United States has this debt, which it sells debt securities throughout the world, and what it has to do is it has to pay interest on these debt securities, treasuries, bonds, whatever. The United States has to pay interest, right? So what happens is, in order to pay the interest, it has one way he could pay is through taxes, right? He could raise everybody's taxes, and everybody can pay higher taxes, generate more revenue, and generate more revenue, and and through this revenue, they can pay back what we owe as a country. Nobody likes higher taxes, and I don't think this administration is going to raise any taxes. All right. So the second way that they can generate income, something that's a little different, right, is they can inflate our way, right? So they can lower the price of that. How do they do that, right? So inflation, what happens is, see, we have a progressive economy, right? And a progressive tax system. So basically, the more you make, right, the more you pay in taxes. All right, the more you make, the more you pay in taxes. So what happens is, if the prices of everything is rising, right, and they're still taxing, guess what? Guess what? Guess what's happening? As those prices are rising, and maybe say if they that now the amount that they're taxing also that amount increases, right? Because they're taxing on a larger amount. Okay, so the dollar is currently deflating the price of the dollar, and because inflation is going up, right, and it costs more for goods and services, and there's more dollars out there chasing goods and services. That's what happens, right? So that's one of the reasons. So people are like, man, and central banks they've been buying. I don't know why I decided. I guess the Warren Buffett thing was in my head, but central banks have been buying gold, right, for the last few years, right? So they already knew once we had all this debt outstanding, and our debt to GDP is where it is. And instead of holding dollars, now they're holding gold, because basically the value of the dollars decreasing, right? And what's going to happen is they're going to demand higher interest rates, but yet we just lowered our interest rates. Take that note. We just lowered our interest rates, right? But what happened is the central banks probably will demand higher interest rates, which we have. We have had higher rates, right? Rates were zero for a long time, right? And we increased rates, but now we're back to a rate cutting cycle now. All right, we're cutting rates now. So now that we're cutting rates, that is also fuel to the stock market. Right? So people are taking their dollars and they're investing it because they know the dollars are decreasing in value because the goods and services around that you use the dollar to purchase are increasing. So in order to keep those dollars sane, keep those dollars whole, you have to put them in risk assets that go up, right? I like what I teach in the club is like, hey, have a dividend portfolio that generates money rather we buy or sell. We get money every month, right? Have a dividend portfolio. Okay. All right. So that's it on deflation. So look, we're in the fourth quarter. This is the fourth quarter bull run, right? This is a great time for you to invest. I love having access to my funds. I know most people, well, I have a retirement account and I want to invest in this retirement account. And, but I love having a brokerage account, give you access to your money, right? So, if you generate dividend income and, you can reward yourself. So you got dividend income and I teach trading options and you have option. And when you put those two together, you can generate a nice income for yourself and for your family. All right. So this we're in the fourth quarter bull run. So if you want to invest money, this is the time, right? Especially on days where the market comes down, and we have a negative day, right? And the market sells off. That's a good time to pick up shares of your favorite company, whatever that is. All right. So I just want to get on real quick and just talk about what's going on out there. Please invest your money. The value of your dollar is decreasing daily, right? Decreasing daily, right? So and on that note, man, teach your kids, right? Teach your kids. Develop that dividend. That's what I'll probably discuss next week about developing a portfolio for your kids. What if your parents had developed a portfolio for you, right? Think about where you would, and they started back when you were a kid. Think about where you would be right now financially. Would you have a lot of worries about what's going on in the economy right now? Right? All right. So, and even if that wasn't done for you, you can start your portfolio as well as starting a portfolio for your kids, right? Because you have the information now. If you listen, to me at all, you have the information now. You should have a brokerage account for your kids, and should be putting money in there. And I know money is a little bit harder to come by, in this economy and in the way things are. But you got to make some sacrifices, all right? So, and that's one thing I did early on is I sacrificed, and I've been blessed making that decision. So, all right, until next time, First Fruit Stock Club, we come on every Thursday. I am working out. So I have a paid club and I have a free club. So I'm just working out the kinks of both of them. And just to get people who may be interested, who, may be cautious about investing or don't know anything about a club, you can come in for free, get some information. If it's for you, great, you can move forward. If it's not for you, you can just find something that's for you. All right. Thank you guys so much for giving me a few moments of your time. Man, invest your money. And until next time, be fruitful.